Ladies and gentlemen, welcome back to the studio. The overall market took a pretty big hit for two big reasons. The first is what happened with Joe Biden signing the infrastructure bill into law. And there's a crypto tax provision in this, which we'll dive a little bit deeper into. The second was because of FUD coming out of China. We are always seeing fear, uncertainty, and doubt come out of China, and this was no different. But these are times where millionaires are made and people make a lot of money in crypto by diving a little bit deeper, looking at the details, and that's exactly what we're going to do today. So if you guys enjoy this sort of short form, concise, no BS content that doesn't waste either of our times, we'll make sure to like the video, subscribe to the channel, as we are closing in on 300,000 subscribers probably in the next couple of days. But anyways, the overall crypto market is currently sitting at a $2.64 trillion market cap. We're seeing that it's down around 6.5% over the last 24 hours. And in my opinion, this is an extreme overreaction because all the news that has come out over the last 24 hours between infrastructure bill, between FUD coming out of China, is all stuff that we have seen multiple times in the past, and nothing is different right now than a couple days ago. There's no difference in the market. Everything was already to be expected. So when we see days like this where everything is in the red all across the board, it presents a great buying opportunity to get into projects that you may have been looking at for a while. Things like Matic, which is down to $1.60 per coin, $1.59. Things like Luna, which is down over 10%. Litecoin down over 10%. All these projects that you might have been looking at are now at great positions to dollar cost average into and buy more of. So before we get into the couple of catalysts, the first thing I want to go over is in terms of technicals, because in terms of the charts, nothing has changed. We are still exactly on track to reaching that $200,000 per coin Bitcoin by the end of this bull market. So around January to March 2022. So if we look at 2013, 2017, and 2021, you could divide up the rally into about 11 different waves. And what we are seeing is right now, we are nearly identical pattern to what we saw in 2013 and 2017. It looks like we are right in this wave 6. Right after this, every single time we have seen a massive rally pushing to new record highs. And you could see wave 7 in all 2013, 2017 charts. So if we are to follow that, we are still right on track. Looks identical, pattern looks great there. The second thing in terms of technicals is also with one thing that has not changed at all, which is still extremely bullish, which is this 1.618 level and also the RSI. When we look at the 1.618 level, every single time we have had a 2-week close above this 1.618 line, well, that has been right before we have seen a massive rally take place in the overall crypto market. This was from Tech Dev's analysis on Twitter. So every time we have seen a 2-week close in the whole week above this 1.618 level, we have then rallied up to 2.272 level, which is right at $200,000 per coin. So since this has already happened, this is great news. We are still on track to hitting that 2.272 level, which puts Bitcoin right around $200,000 per coin. But the big news why we are seeing the market correct, why we're seeing this big drop all across the board, is for two big reasons. The first is what is going on with the infrastructure bill. So Joe Biden just recently signed off and officially signed into law the $1 trillion infrastructure bill. This brings on a couple of other tougher reporting requirements on crypto trading and helps to raise tax revenue for the government. So what it is there's a crypto tax provision in this infrastructure bill. The whole reason they included it in this bill in the first place was just to raise about $28 billion for the government to help pay for this $1 trillion infrastructure bill. But in this, the big controversy, which has been around for months, is with the word brokers. In this bill, it specifically defines brokers. And the problem with this is that it requires anyone who falls into this broker category to report transactions worth over $10,000 to tax authorities and a couple of other things. The problem with this is that the description of brokers in the bill is very broad. It essentially is going to include anyone who does crypto mining, software and hardware developers for crypto, and people who don't necessarily have the right tools in place to even collect information from the end customers. So this can create a problem because ultimately the impact on crypto and on the industry is that service providers may have to charge higher fees to compensate for taxes levied on them. This is the big issue. It's just that some of these companies are going to have to pay more in taxes, maybe have to put new systems into place to actually have to track what is going on. That is the first thing that's happening. But the reason why I think this is an overreaction is because we have known about this since August. And I did a video exactly on this article back on August 24th. We talked about this exact article, which was months ago, and the good news here is that the Treasury said back in August that even if this crypto tax provision isn't amended, if the infrastructure bill passes exactly how it was, which is what happened, they said that they would not target non-brokers such as crypto miners, hardware developers, software developers, and others, even if the provision isn't amended. So they had said this months ago. We had already known this crypto tax provision was in the bill, and the Treasury has already said they weren't going to enforce it on non-brokers. So there was nothing to be worried about. We already knew this was in place. Second thing that happened is that now that the bill is passed, it's in the hands of the U.S. Treasury, which means that U.S. Treasury has already confirmed that they're not going to be very strict with these rules on non-brokers. So obviously, they could still always change their mind, but from what they've said, from what we've seen since August 24th, this doesn't seem to be an issue. This seems to be a non-issue, and even though the bill just passed, we've already known all of this information for months, so that's why it's an overreaction, in my opinion. Second thing that happened was with China. China reinstated, they came out and said that they were cracking down on state-owned enterprises, and they said they have to cease all involvement in Bitcoin mining. Again, this is old news. We have seen this multiple times in the past. Back on September 24th, China announced a ban on all cryptocurrency transactions, all cryptocurrency mining. And for the last couple of years, every single year, they've issued a number of warnings and bans on cryptocurrency trading activities. So seeing this was also a complete overreaction, and it shouldn't have really moved the market at all. But yet every single time China comes out with this news, it pushes the market down, manipulates the market. And you know what? Maybe they're even buying back in at lower prices. We've seen that happen before. But either way, we have known about all of this for a while. This is an extreme overreaction. We also are seeing that the third biggest whale address just added 207 Bitcoin at $62,000, exactly at the bottom of the market, right when we started to see everything crash. So this is another sign of manipulation in the market with what is going on. Lastly, is with the overall market right now, even though we saw this crypto tax provision pass, even though some people are worried about what's going on in China, there is a lot of good news happening, which is that number of senators like Senator Wyden and Senator Loomis, they're introducing a crypto amendment to Biden's infrastructure bill to try and make the necessary changes about the wording and how they define brokers in this bill. So even though it's already passed, even though the Treasury says they're not going to enforce it, it's still always good to have this written in paper and actually have the bill amended. So we'll see what happens there. Either way, though, today's a great opportunity to buy into the market. We are already seeing everything that's happened, we've already known about for months. This is just an extreme overreaction taking place. So any crypto that you have wanted to get into for a while, whether that's Polygon, whether that's Axie Infinity, whether that's any coin, Decentraland, doesn't matter. Any coin that you've wanted to get into, now is a great day to buy in because we are seeing prices down between 5 and 15%. So anyways, let me know what you guys are doing. Hope you enjoyed today's video, and I'll see you guys in the next episode. See ya.